Joining us for more is John Ransom, Director of Healthcare Research at Raymond James. John, it's great to have you here. There are a lot of people who actually have looked at these events with the stock down 50% and at 11 times PE and said, you know, maybe it's actually time to own some shares. So talk about what's giving you some pause here.
Yeah, Kelly, I despise doing this, downgrading a stock after the horse has left the barn. So I realize it's of limited utility, and I've got my dunce cap in the corner, so no excuses. But, the question is what happens looking forward, and three quick points. So number one, our new 2026 earnings number is $25 a share. So if you take the current price over $25 a share, that's about a 12.5 PE. And, I think what's going to happen with United is that it's going to trade closer to an industry multiple, which is a low teens PE, versus the old peg of the S&P 500. Maybe 30% discount would have been the old floor. So first of all, the string of events you laid out and others are going to lead to a lower PE. The second thing is, we weren't surprised at the management change, but we were surprised that they withdrew guidance. Remember, they just gave guidance less than a month ago. And so to step back from that with weeks after you give guidance and say, never mind, it's gotten worse. That's really the biggest thing. And then the third thing, and this
John, I'm sorry to jump in on you, man. I know you got 3 points. I want to highlight point 2 for a second.
Sure.
We'll go back to point 3. What you just said is massive. The company gave guidance a month ago. Now they withdrew their guidance. Okay, I've been doing this a long time, so has Kelly. I don't know if I've ever seen a company of this size, certainly not a Dow component, do this. Okay, take aside the fact that one of their executives was killed 6 months ago, lost half the investor value in a month. The CEO unexpectedly quits. They withdraw their guidance, which means they don't have any idea what they actually earned, I think. Do you feel deceived by this company? Do you feel like there's something weird under the hood here?
I would say that if you look at the earnings last year, there were a lot of one-time gains in those numbers. So the earnings foundation was lower. So they pulled some rabbits out of the hat last year to print a PE that wasn't a high-quality PE. Brian, what I'd say about this year is they've stopped doing M&A for a couple of years now, and sometimes M&A can be a real driver of earnings. But yeah, I think everybody, the messaging and the numbers have been moving around for several quarters now, and yeah, I think this was probably the crescendo. And just the last thing I'd mention, the company has over 70% of its members in 4-star plans, and that gets reassessed in October. And you saw what happened to Humana. Humana went from 94% to 25%.
Wow.
It doesn't take much to lose your star ratings. And so, yeah, I hate, we've been wrong about this. The stock had a great rally after the unexpectedly good Medicare rate update a couple months ago. But what I think the market, I could say clearly, and ourselves, we just didn't count on the fact that the company that historically has been the best executor has suddenly, the numbers have suddenly fallen apart for reasons that aren't very clear.
And we're not here necessarily to rake you over the coals for that. I mean, we're just all trying to understand what's happened, and to the questions that have been raised about, were they overbilling or whatever for you? I mean, are there structural issues that between political scrutiny, investor scrutiny, and everything that's now going on, you think could come to light here?
I don't necessarily agree with Mr. Ackman. I have a lot of respect for him. But there's part of their business called Optum Health, and it's really a shadow insurance company. And what they do is they take risk for themselves, and they've got over $100 billion of intercompany eliminations, but they also take risk for other insurance companies. And this is called value-based care, physician-driven value-based care, and other platforms have not been able to make this work. And so I would say the biggest question mark from a strategic standpoint, does it make sense to take risk for your competitors? And what they say is, gosh, we take this risk, and then we find out all these things after the fact.